What's up traders, in this video I'll be performing a market forecast on NASDAQ using smart money concepts, so stay tuned. Now this video is going to serve as my outlook for NASDAQ for the month of March 2025. Now the purpose of these market forecast videos is to, number one, show you guys how I go about establishing a directional bias, be it short term or long term. And then number two, how I go about identifying potentially higher probability areas to trade from that are in line with that established directional bias. One of the main reasons I focus particularly on Euro USD for these market forecast videos is because I wanted to show you guys how I follow price action in real time on a month-to-month basis so that you can see how I apply my concepts. However, in this video, I decided to look at NASDAQ as it looks like we may potentially be seeing the early signs of a correction on the horizon. Now, as always, we're going to be focusing on the weekly, daily, and 4-hour time frames in order to give you guys a medium to long-term view of what I believe is going to be happening next here on NASDAQ, and to ensure as well that the analysis that I perform here remains relevant at least for the entire month of March. Now we're going to kick things off here on the weekly time frame. Our weekly time frame is currently trading bullish. Our last major external breaker structure is a bullish one located here. We have our weekly strong low at this location, which is the starting point of that impulsive phase which generated our bullish external breaker structure. And at this current moment in time, we can see that our internal structure is currently also still trading bullish as it is facilitating that weekly impulsive phase. Our most recent internal range is a bullish one as well, located here, with this being our last bullish internal breaker structure to the upside. Now we will be having a closer look at this in just a minute when we drop down to our daily time frame, which is the internal of my weekly time frame. Now the reason I believe that we could potentially be seeing the early signs of a possible correction here on NASDAQ is because for the past couple of months, we have been seeing price action consolidating in this area. This consolidation phase began all the way back at the start of December 2024, and price action was essentially just trading sideways in this area. However, towards the end of February 2025, we saw the introduction of some bearish pressure, which has now facilitated the start of our internal pullback phase. Now, our larger weekly external pullback phase will only truly be signaled when our internal structure shifts from a bullish market state to a bearish market state, and that will require a violation of our internal strong low. But at this current moment in time, we are now seeing that there is some bearishness stepping into this market. The main area of interest for me in terms of this internal weekly range is going to be this weekly demand zone here. This weekly demand zone forms part of a weekly demand chain. And as you'll see in a minute, when we drop down to our daily time frame, it is a POI that is well priced within this weekly internal range. And so not only is this the main sell target for the internal pullback phase, which has recently been confirmed, but it also represents a potentially high probability demand zone where we could see a resumption of our weekly impulsive phase should a mitigation occur before this internal week high is violated. So going into the month of March, from an overall external structure point of view here on the weekly time frame, we are bullish. However, we now have a medium to short-term directional bias which points bearish as we anticipate price action to potentially target this weekly demand zone as that internal pullback phase takes place. And if we now drop down to the daily time frame, which is the internal of my weekly time frame again, we can now see that daily external range just a little bit clearer. The daily external is bullish as well because it is currently facilitating that weekly impulsive phase. We have our last bullish daily external break of structure located here. We have our daily strong low located here, as this is the starting point of the impulsive phase, which generated that bullish external break. And right at the end of this past trading week, we saw our daily internal structure shift from a bullish market state to a bearish market state at this location here. And this now signaled the potential start of our daily pullback phase and allowed us to establish our new daily external structural range with our daily week high located here. Now, because of the fact that our daily is bullish, the overall objective of this time frame is going to be a violation of this daily week high level. Now, our job is trying to figure out how price action is likely going to go about potentially violating that level. With our new bullish external structural range established, we want to identify well-priced POIs within that structural range that price action can initially pull back into and mitigate before we see a potential resumption of the underlying trend. Remember, when you're trading in this way, when you're using this approach, you're trying to trade from high probability, well-priced POIs, and you identify those POIs by establishing your structural range. And as we can see, here we have that weekly demand zone that forms part of that weekly demand chain that now sits within discount of our daily external range. And so this is why this weekly demand zone now represents a really good, potentially high probability area where we could potentially see a resumption of that underlying bullish daily trend. Not only that, but we also have this refined daily demand zone that sits at the extreme of the larger weekly zone that offers us a slightly better risk reward entry point should we choose to trade this area directly. Because remember, not everyone in the market is executing on lower time frames like the 1 minute or the 15-minute. You do have your swing traders, you do have your position traders that tend to trade your larger time frames like the daily, like the 4-hour, like even the weekly at times. And so this daily demand zone now represents a good potential buy opportunity for those potential swing traders should they choose to trade this area directly. So because the anticipation is for a pullback into this weekly/daily demand zone, this, like I said, gives us a medium to short-term directional bias that is bearish. And so we can now utilize that bearish directional bias to look for potential sell opportunities as this internal pullback phase is taking place. Now you'll notice that this period of consolidation led to the formation of very large daily internal ranges. We will have a closer look at this in just a minute when we drop down to the 4-hour time frame. But effectively, with our internal structure shifting bearish in this location here, we now have bearish internal structure. And the mechanics of how we go about applying our rule set remains exactly the same. After a break of structure, we can anticipate a pullback. With that pullback, we want to look for potentially high probability areas that price action can pull back into before a potential resumption of the underlying trend. The underlying trend from an internal point of view is going to be a bearish one. And so because we are anticipating a daily pullback down towards this weekly/daily demand zone, we can now look for potential sell opportunities that fall in line with that bearish internal trend. As remember, our internal structure is now facilitating our daily pullback. And we now have two daily supply zones that fall within the internal impulsive phase that generated this internal bearish break of structure that we can anticipate a internal pullback into before a potential resumption of this internal bearish trend. Now, if we assume that this daily low from Friday the 28th of Feb 2025 is our new daily internal week low, obviously it hasn't been confirmed yet, but if we just utilize that point to mark out what our new daily internal bearish leg could potentially look like, we can see that this first daily supply zone will more or less be located in and around the EQ of that new bearish internal range, if indeed this is the location of our internal week low. And so now this daily supply zone represents the first potentially well-priced POI that we can anticipate price action to come into, mitigate, before we see a potential resumption. The only reason we are anticipating potential bearishness from this POI or this POI is because at this current moment in time, price action is still trading within premium of a bullish daily range. And realistically, we would like to see a pullback into at least discounts before a potential resumption. And if we now drop down to our 4-hour time frame, which is the internal of our daily time frame, we can see that daily internal range just a little bit clearer. Now, if I zoom out just a little bit more to give you guys a full picture of that consolidation period, what you'll notice straight off the bat is that during this period of consolidation, we had many periods where a lot of volatility entered into the market. And we also had two very significant market open gaps during this period as well. Now, this directly resulted in the expansion of not only our 4-hour external structure, but it also resulted in the expansion of our 4-hour internal structure. As you can see, we did have our internal structure just expanding in size and getting much larger and much larger. Now, this has resulted in, at this current moment in time, our new 4-hour strong high, which is the starting point of the impulsive phase, which generated our bearish 4-hour breaker structure here, to coincide with our 4-hour internal strong high. As you can see, prior to our internal structure shifting bearish here, our last internal bullish breaker structure was located all the way up in here. And so we had a prolonged period of impulsiveness to the upside here. And then that was followed now by a prolonged period of impulsiveness to the downside in here, which is the reason why at this current moment in time, our internal range has not been established yet. And the reason why our 4-hour external strong high coincides with our 4-hour internal strong high. This is something that does often happen in the markets, particularly when you utilize that relationship that exists between internal and external structure, and when you utilize that to help establish your new structural ranges. Now, the reason I say this introduces a layer of complexity here on our 4-hour time frame is purely from the point of view of establishing your new 4-hour structural range. Because at this current moment in time, this daily supply zone represents a potential sell opportunity to trade a resumption of the 4-hour impulsive phase. Now, within this larger daily supply zone, we also have a refined 4-hour supply. Now, this refined 4-hour supply zone again gives us a slightly better risk reward entry point should we choose to trade this area directly here on the 4-hour time frame. Or instead of trading this area, we can wait for a mitigation of our POI. We can wait for a market shift, be that a 4-hour internal market shift, or depending on price delivery, a fractal market shift before we potentially get involved, either using a risk entry or using a confirmation entry. Our second area of interest in terms of this impulsive phase is the daily supply that sits all the way at the extreme of our unconfirmed, yet to be established 4-hour external range. And that daily supply zone also has a refined 4-hour supply within it as well. Now, I do have a couple of exclusive videos on my Patreon explaining how you go about navigating scenarios like this and price delivery like this, where your internal structure expands and when it starts to overlap with your external structure. So definitely feel free to join up and check those out if you're interested. But going into the month of March here, especially the first week or so on the 4-hour time frame, our immediate buy target is going to be this daily supply zone. And remember, for those of you who trade on the lower time frames like the 3-minute, the 1-minute, etc., depending on your price delivery, of course, you can utilize that very short-term bullish directional bias of anticipating a pullback into this daily supply zone as a way to facilitate looking for potential buy opportunities up towards that area. Again, it will depend on price delivery. It will depend on how market opens. But for the most part, this is going to be the first POI where we can start to look for potential sells from, not only to facilitate a resumption of our new bearish 4-hour trend, but also to look for a resumption of our daily pullback phase, which is obviously being facilitated by 4-hour structure, down towards this weekly/daily demand zone area. The next immediate sell target would be this daily demand zone here. However, as we can see, this daily demand zone is not well priced, and so the anticipation would be for a potential short-term bullish reaction, which could potentially help facilitate an internal pullback, for example, a 4-hour pullback, before price action continues down lower with that daily pullback phase. And again, beyond that, if this area doesn't quite facilitate that bearish push, the next area of interest would be this daily supply zone at the extreme. Now, just to end things off, I do want to reiterate that there is absolutely no guarantee that price action will indeed come back and mitigate weekly demand before we see a violation of the daily week high. There is also no guarantee that price action will continue higher to violate the daily week high after this POI is mitigated, because it could easily just give us a short-term reaction before potentially violating the daily strong low. A violation of that daily strong low would obviously allow for the establishment of this new bullish weekly external range and will allow us to confirm our weekly pullback phase. However, until our internal strong low is violated, this weekly demand zone, in combination with the refined daily demand zone, is going to be a really good high probability area where we could potentially see that bullish resumption originate from. All we're trying to do is identify high probability areas to trade from. And having identified that potentially high probability area, we can look to trade down towards that area, utilizing that short to medium term directional bias. So really nice, interesting price action here that is developing on NASDAQ, particularly because it does look like price action is now starting to break out of this consolidation period to the downside. Prior to this bearishness coming into the market, it was a fairly mixed bag in terms of looking for potential opportunities here, especially if you were utilizing your 4-hour time frame, for example, to get your directional bias. But it does now look like we're starting to see some good movement, and it'll be interesting to see whether or not that bearishness can remain in place for the month of March. Now, if you found this video helpful, informative, or entertaining in any way, please make sure that you like the video, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching. Speak to you in the next one.